Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for March 3rd, 2016. I am Frank Ochoa, aka PivotBoss, with your analysis for the current session. Taking a look at the ES in a daily time frame here. Price has basically traded in a quiet overnight range right now. As a matter of fact, all the major futures contracts we're following here, crude oil, gold, ES, NQ, all trading at 30% or less of average 10-day range. Heading into RTH open like this is very, very quiet trading range behavior here, and something to watch out for. Now, what we're looking at here with regards to the ES is something that is very important here, and it's basically taking a look at the previous key range support zone right here. And we have an LVN, a composite low volume node here, 1981 half. 81s had been very, very important in a prior period of time. And you can see how prices are coming into that zone now and testing that area right as we speak. So this is a very important zone. I mean, anytime you have a major price distribution here forming the way it is, and then you see a violation and a big time move against it, when you come back to that level, there's going to be some support in that zone. And right now, prices are testing right at that 1981 half. Any failure to see acceptance above that zone could open up a quick retest back toward the HVN at 1921. As of right now, obviously, we've been seeing this thing squeeze higher. Any pullbacks could be defended for another attempt at higher price levels into 2010 and beyond. So something to watch out for here. 1981 half, very, very important at the moment, and something we'll be watching in the lower time frames. So right here is the ES in the lower time frame right now. You can see how prices basically recovered after the early pullbacks the previous session and rallied. And right now we're just seeing a very quiet overnight range right here with lows at 78.5 and the high here coming in at 87.75. That narrow overnight range here could spark some morning expansion once we see a breakout from that range. But overall, after you see a huge rally the way we did, we could continue to form a two-day range here on these highs. Any rejection of the prices above the previous session's high here, 1984.75, could be seen as a return back toward the low. So we'll be watching up here to see if there's further rejection above these highs. Right now, the primary upside target, should we see an upside break, primary upside target on the day would be the 2002 quarter level with a scaling point at 1994 half. So if we push through these recent highs and can get beyond the 25% weekly expansion level, we could be looking at further strength. Otherwise, failure to get above 89s opens up the potential to see a drop into the downside primary target again. That would be 64s, and that would test the previous session's low at 66 quarters. So that's something to look out for as we head into the session. Looking at crude oil now, and this one's been trading right around the midpoint of the key range here that developed in January. And basically this 34.63, very important here. Price just kind of holding around that level. Any failure to see acceptance above 34.70, 34.80 opens up the potential to retest composite VPOC at 33.44 with a shot at seeing price auction down to the bottom of value at 30.56. So right now, this is above value in the composite chart here, and any failure to hold or exceed acceptance above that zone could auction price all the way against the range toward the bottom of value. Pullbacks into composite VPOC have been defended. So right now, until proven otherwise, bulls want to keep that area bid for a shot at seeing further strength toward the next upside key levels. Upside key levels here would be 36.50 and also 37.50. So we do have a major LVN in 37s. So getting into that zone could see a little bit of weakness once we get to that area because there has been rejection before. Looking at the intraday time frame for crude oil, you can see how prices are just kind of coiling up after the recent rally here. We got a big move up, major buy imbalance right here, 5,000 contract buy imbalance that went offered. That led to a pullback, and so far prices continue to stay beneath that zone. So major rejection at our 35.03 key level, which is based off the previous session's key range. We see prices kind of coiling now toward an apex. So this could spark some significant breakout activity here once we see a push beyond 34.90 or 34.40. So watch for further chop and development within this zone, but once we get a breakout from this tightly coiled range, we could be looking at significant movement ahead. Above 34.90 obviously tests prices above 35s. But beyond there, we could be looking at a continuation into the upside target as high as 35.88, which is the primary on the day, should the low remain intact. Obviously, we're likely going to see further expansion out of this range either way, so watch for these targets to update. The downside push through 30.40 targets 5-day VPOC at 33.84. All right, taking a look now at gold futures. Here's gold. Gold has continued to trade within its clearly established key range here, 1263.90, 1191 half, midpoint at 1277s. Prices have been chopping in the middle distribution of that range and continue to hold it. And I mentioned before that is a neutral key range here. We could be looking at significant expansion once a breakout from this range materializes. At this time, we've been seeing lots of rejection above 1245s. So if we see acceptance above 1245s, we could run the stops of all the bears that had gotten short at or beyond that level over the recent weeks, and that could lead to a continuation into these upside targets, 1263.90, 1282, and 1301. 1300.1 rather. Now looking at the NQ, very similar to the ES, we've seen a significant rally and then price held here. That's what you would expect. That's what we got the previous session. Now we're seeing an even more significant narrowing of the range, very tightly coiled price action. The expectation is that if price pushes up this high, you want to see a digestion of that move. You want to see price hold these levels. Even a pullback could be defended as low as recent highs here. So we could be looking at a pullback into 42.63, 42.65. And that could offer an opportunity for bulls to come in and defend for another squeeze into that 4,400 HVN. So their HVN right there at about 44.05 or so is going to be the next point to target, 44.10s. So look for that to happen should a pullback be defended. Otherwise, failure to hold above this 42.87 MCV POC opens up a return to recent support at 41.90. So we'll see if prices can sustain these recent levels after the rally. If not, we could be looking at this thing marking all the way back down against the recent rally. Looking at the intraday time frame, what you're seeing here is price basically trading within a super narrow range within the previous session's range. We saw rejection above the 25% weekly expansion target right here. Price pulled back toward the previous week's high. And again, if this is a lower high off the 25% expansion level, then we could be testing the previous week's high at 42.93 with a shot at seeing price basically drop all the way back to value, and that's going to be 42.35. So any failure to see acceptance beyond 25% of the weekly key range here opens up a move all the way back to value. So that's going to be important. If price can push through this 43.45s, then you likely mark your way back toward 4,400 and that 50% expansion level, which is the PivotBoss R2 for the week at 43.97 half. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.